Hello everyone, I'm David Darst. We've had quite a month of May, as you know. The Standard & Poor's 500 was flat for the month. Can you believe that? After big ups and downs. It was a very volatile month and it ended essentially unchanged. With the S&P index, it's now down 13.3% year to date. By contrast, oil had a very strong month. Oil was up 9.5%. It's up 53% now for the year. Closing the West Texas Intermediate at 114.67. Gold had a tough month. It was down 3.5%. It's now up for the year only 0.7%. Now the industry groups, the Standard & Poor's 500 has 11 industry groups, and here in descending order is how they did during the month. As you might imagine, with oil up 9.5%, the energy sector was up 15.1%, the S&P energy sector. Next was the financials. They were up 2.6%. The healthcare, that's the drug stocks, up 1.3%. The industrials, down 0.8%, so down just a little bit below 1%. Materials and the information technology, they were down 1% each. Communication services, this includes some of the social networking stocks, okay? Some of the big search engine stocks, okay? Down 1.8% for the month. Utilities, down 3.8% for the month. And then the consumer sector. And we've seen this past month, you saw big price moves in some of the companies like Walmart, okay, like Target. They dropped an enormous amount after reporting earnings, and also, more importantly, the guidance was not so constructive, okay? It wasn't horrendous, but they just said, look, the individual is not spending to the degree they were spending because inflation is cutting into the individual's budgets. So consumer staples were down 4.7%. Consumer discretionary was down 4.9%. And the worst performing sector of the S&P 11 sectors this past month was real estate, down 5.1%. Now, looking at the bond markets, the Treasury two-year yield was down 17 basis points for the close of the month, 253. The 10-year, 285. It was down 4 basis points, and the 30-year was 307, up 11 basis points. The dollar, with short-term yields down 17 basis points, the dollar lost 1.7% against the DXY index of the 6 major currencies. That's the yen, that's the euro, that's the British pound, Swiss franc, and so forth. It's up 6.0% year to date. One of the things I want to highlight that happened in the month of May, I said it was a volatile month. The volatility index started this month at about 33.45, 33.40, okay? And it ended the month at 26.33. There were 21 days in the month, trading days in the month of May, 21 trading days. And 8 of those trading days, the volatility index was above 30. That's a pretty high level. 40 starts to ring alarm bells, but 30 and above is like a baby having a high temperature, okay? It's not life-threatening, but it's a high temperature, and it's a cause of concern. So let's get ready to wrap up with the 3 issues that are really uppermost in our mind right now. For us to get bullish, we would need to see major progress made on these 3 issues. The first one, of course, is China and the COVID lockdowns there. The second thing, of course, is the economy, the Federal Reserve, and inflation. They are all intertwined with one another. And on the economy, we are looking for the economy to slow down. It's probably, in our opinion right now, going to be a growth slowdown this year, not necessarily a recession. It's certainly possible if the Fed is too tight, if inflation remains too high, and this is the second part of this chapter 2 here, inflation basically starting to look like the Fed's preferred measure of inflation is the personal consumption expenditures index. And in the month of May, it was reported at 4.8%, and the previous month was 5.2%. It's still high. Personal consumption expenditures after energy and food. That's called the core PCE. So it maybe looks to be moving a little bit in the right direction. At the same time, you have Fed governors, you have the Fed vice chair, that's Lael Brainerd. She said she's going to have to wait to see how things unfold in the month of. You've got a Fed meeting on June 14th, 15th, and you have another Fed meeting on July 26th, 27th. Then you do not have a Federal Reserve meeting in August, so you got to go all the way to September. She said she's not going to commit, and I think this is reflective since she's the vice chair of the Fed. She's not going to commit to a 50 basis point increase in the policy interest rate for September, but it's certainly not out off the table. So that's chapter 2 is the economy, inflation, and the Fed. Where do we come out on this? We think that earnings are going to be lower. Not 10% for the whole year, but maybe more like 8%, 7%. As inflation cuts into margins and inflation causes the consumer to spend less. Their pocketbook is not spending have the spending purchasing power that it used to have. I would say we're probably 40% of the way there. We're certainly not. For me to come here and get very, very bullish, we would need to see definitive signs that inflation is really coming down and going to stay down. It will not go down to 2% or below that it used to be at. It's much more likely to come down to a high plateau, maybe 3%, maybe 5%. That includes energy and food. The last thing is the Russia-Ukraine conflict, and that one is one of the most difficult to assess. We are not geopolitical experts. We see a long drawn out. It's been over 100 days since February 24th when the invasion began. We're not experts in such matters. We do see signs. Some people have said, well, let's come up with some sort of negotiated settlement. Some famous statesmen like Henry Kissinger, okay, other people in Europe have said, let's make a deal, and so we can stop the bombing and you know the killing and so forth. So that one, though, I would say, in my humble opinion, is something it's going to come from out of the blue. It's impossible to predict, but I think we're not more than 20% of the way through to being able to tell you that we have very good news to report for you. We're going to wrap up with the 3 themes. Diversification, okay? You want diversification. You want different kinds of assets, growth, value, and defensive kinds of assets. You want liquidity so that you can take advantage. We think this rally that took place towards the end of the month of May is probably a rally to be using to upgrade the portfolio, sell the low-quality assets. Any money that you put back into the market, make sure you're buying high-quality assets, all right? And the last thing is use this to upgrade the quality of the portfolio. We think this is a rally within more a difficult trending market. This is not necessarily green light that we can go off to the races. With that, let me wish you a great month of June, and we look forward to catching up with you soon.